JMGM. Okay. African Queen. Good. Can we see my screen already? So you two can check out this setup. I saw it when we were studying with the students on Friday, I think. So you can check it out. GBPAUD. The setup makes sense. So I believe you should catch a good trade here about five if you want to exit early, 5 RR or something. So the concept of liquidity, African Queen, let me quickly brush through it. So liquidity is money, literally money. Where does it hang in the market? It hangs at let's let's use a cleaner chart. It hangs at every structural point in the market. At every structural point, there's liquidity in the market. That's where money is. So we say money is in the market. All these candlesticks, they are money. But then we now have a specific locale that we can say, okay, you can locate money here. All these structural points, they are liquidity hangers there. Then we now call it a name. We said external liquidity and internal liquidity. These ones that are in here now, these ones that are outside here, these ones that are outside, they are called external, Italoa. These ones that are in, they are called internal. To get it? So that's internal liquidity and external liquidity. And then now, price sweeps liquidity from zones to zone. There are two types of liquidity grab or liquidity sweep of liquidity. There are stuffs actually. So we have the trend line liquidity grab, whereby price would have been respecting a trend line like this. It would have been respecting it, especially after two touch, most times. They need to break out of it, break structure back, then the trend continues. So this is the trend line liquidity graph. All right, this is the trend line liquidity graph. I want to relieve a recording. Okay. So the other example is just the structural one, whereby it won't be on the trend line. We just want to see something like this. Market will sweep this low, break structure. Then this one needs an inducement. This is the one we now have demand, supply, breaker block, FVG. So this is the structural one, the structural liquidity. All right. So this is the sweep. And this one is very common in the markets than this one. Very, very. And also, this is the irony. When you draw out something like this on this, you see that you also have the liquidity grab here, like this trend line on here. So it is everywhere, but this one can be very, very clear to see than this one. Do we get it? So those are the two types of liquidity you might want to see on the chart. Now, depending on the time frame you are on also, there's how to also read liquidity per candlesticks, especially when you are on the weekly time frame or daily time frame. The way we read liquidity there can be different from what you are reading on 4 hours, 1 hour. What do I mean? Take a look at what we have here. Let's find an example. All right, let's find an example here. Okay, take a look at what we have here. This eye, we're on the daily now. This eye that was swept here with this week, this is a liquidity graph. This is a liquidity graph. You agree with me that this single candle is what market does in a day. So when on 4 hours or even 1 hour, that's a whole lot of structure. Do you get me? That's a whole lot of structure. Even this is another type of, if you're only focusing on daily or 4 hours, this is this one alone is a strategy, entry strategy. whereby the candle that was swept, you can use the body sometimes of the week. You see, market will come back there and you choose your entry. This kind of stuff usually work on gold very well. Very well. Lots of times. It is even usually instant. Even the buys that happened on gold this week, we might have to check it later on. It's also something like this that happened. It's something like this that happened. So there might be situations like this. The sweep can be just weak on one another, and then you know that okay, market has moved. So and then sometimes it is just full structure, but what validates it more is break of structure. You have to see it too. So another things that might be stressing us around it is that maybe we are not patient enough for the structures to fully form. Sometimes we just feel like, especially when you have fewer pairs that you're focusing on, you might be frustrated with waiting, and you just be like, oh, I want to find something to trade. So that is in that kind of situation that you might have to find more pairs to trade. But if you are someone like me that you don't like trading every time, you want to watch movie. So you can just focus on the single ones. And when you now eat on those single ones, you just eat bountifully. So that's another trick to use. All right. So uh what else? Okay, let me now throw it to you. Do you understand and am I able to answer to uh fill in the gap for you already? And is there a specific aspect of it that is still unclear to you? That question is to African Queen. You asked about liquidity. So what I'm about to trade here now is also just price action, understanding liquidity. This has already swept this low. So then, okay, I think I have a message. The one you explained now about candlestick, I did not quite understand. Yes, I know you. It might be confusing. I will get back there. But let me just quickly brush through the price action here. All right, take a look at what we have here. Now, this trend changed. This kind of coach now, we did not specifically wait for market to take out this high, on even though it has happened. But even before we get that clarity, the first clarity we saw that was that price was breaking structure to the upside more and more times than not. So we had this break of structural valid one, then we had this second one before it's now broke the last time. That's if we're using 4 hours structure. But if we go down to lower structures than this, or probably 1 hour, 50 minutes or something like that, we will get a coach more earlier than this one. All right. So, but then we've seen couple of break of structures here, and price has just been giving a very clear mitigation. So the only unmitigated zone now is this. This one has not been mitigated. And then we have a liquidity close to it. Very, very close. So we wait for market to tap fully into this and we just buy. So by tapping into this, it means it has swept this liquidity here, this low here. That's liquidity grab. So price will sweep this one to tap into here, which we call inducement. It sweep their inducement and then we buy. That's it. Now going back to the candlesticks that you mentioned. Now take a look at what we have here. Take a look at the candlesticks that we have here. You see that these ones are the same, they are on the same length. They are the same height compared to this one. Do you see these two examples? I think this will clarify it more for you. Let's use these two examples. Do you see them? Can you see them? This one now, this ones here that have the same length, we call them draw on liquidity. The liquidity pool here is the same. It is like saying this one has order of, or this one has an amount of, let's say, 100,000. This one also 100,000. They are the same. More like, what's this confirmation candlesticks? Tweezer top,
Mm,
tweezer. Someone wanted to say something.
I mean, I think we want to say tweezer top or tweezer bottom.
Yes, 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 yes. So that is an example here. Now look at how this one is almost of the same size. But then look at how this one, this red swept this one. It swept this one before closing below it. Now, if you now look at this one that swept, you can see that it swept to tap into what? Into this one, into this other block. That's how to trade that time frame. Oh. Without some clarity. That's why you see some people's structure and you be like, how did they buy? Why did they sell here? Why did they do this? It is because they are looking at that higher time frame. You are seeing one candle, they are seeing full structures. So in this kind of situation now, they see this green candle as engineer liquidity structure. And if you go down to lower time frame, that's what is there. Then this one will sweep it to tap here and go. Some might not even draw this other block at all. They will just pick their entry here. They wait for market to sweep this one. Their TP might be and their SL might be here or even lower, probably. And then they target the next internal liquidity, which is this. So stuff like that can happen. So with these two experience, with these two example, I want to believe that you now see the difference and you understand sweeping liquidity. Each individual candle sweeping liquidity that I'm talking about. Most times it happens at structural points. Don't forget. That's where you want to see sweeps, breaks, whatever. That's where you want to see it. Not just at random candlesticks anywhere. Not just random. So if there is a specific aspect of liquidity or liquidity graph that you don't understand, that you now want us to go deep into, then you can also specify it. Or probably there's a structure you've seen that you don't just get. We can also go deep into it. Another thing I think I should add is that for a structure to be valid, and I think I've talked about it, but let me just specifically say it, it must form structure like this. V or A shape. I've been emphasizing on this stuff. Not just one candlestick. It must form structure like this. V or A shape. Just like this ones. This ones. This ones. Not just one, especially if you're looking at lower time frame. You see this, what I'm explaining with this candlestick here, they are on a pro level. They are on a pro level because I only use them on higher time frame safe. I don't look at something like that on lower time frame. I only interpret that on higher time frame because I know one candlesticks there is a whole structure on lower time frame. But if you want to identify structure, that's what you should be considering. Look at what I'm trading here now. Even if this setup fail, I won't feel bad because it is my setup. Take a look. Full structure. This is a structure. This is a structure, not this one. Let's use this as an example. Look at this one now. This is just a candle. This is just a candle. Can it work? Yes. Is it something I want to rely on? No. That's it. Just specifics. I don't want to rely on it. That's the reason I don't trust them. So, do you get me? I have a message. I understand it now. Thank you, sir. I actually met someone who trade liquidity, so I'm always confused when he chooses PRR and a problem. You can gain from his knowledge instead of getting confused on your own. instead of getting confused and then making you look like you know nothing. You can just add is it might just be one or two things is what is trading that is not something you've been paying attention to before. And when he explains it, you just get it better. Liquidity, almost everybody trade liquidity. People just specifically mention some things and they just want you to feel like that's not what you're doing. But we trade the same thing. There's money everywhere in the market. So telling me you are trading liquidity and I'm not is more like saying you are making money and I'm not. We are all trading liquidity. To get it, we are all trading liquidity. So, and a simple rule as well is that market moves from liquidity to liquidity. That's something we hear very well. Market moves, it sweeps liquidity, then drop it to the next internal range and external range. That's just how it moves. So I feel that should address that issue. Okay, so back to the correction of what Basit did on his charts. Let's check it together. I had plans of uploading this video initially, but I don't think I will be doing that anymore. All right, I think the liquidity concept that I explained, uh, African Queen, that's what I use here. That's what I use here. And another thing, let me clarify something again that might sound confusing. I can call this one liquidity concepts now. Someone else can say it is engulfing pattern strategy. Market shall do it. Market will shall do its thing. It is only wrong when it did not when it failed. If it did not fail, then it is right. So don't let them confuse you or don't confuse yourself. Yeah, don't confuse it. Most times when that person you don't understand their stuff, when they say one or two things, you will know that this is something I know. I'm not just paying attention to it. That's why I said knowing is not enough. You have to execute. Execution will make it stick to your brain. You won't forget. And that's just what brings the difference, the overall difference. That's what you need. So Basit, I think you drew your trend from somewhere around here. So I think you were expecting something like this. I don't know. It might not look, I think you were expecting something like this to just roll up, which is not totally fine. Now, this is what I used to. I could have bought here as well, but this is how I approach situations like this. Now, this is daily time frame. All right. Now, first, market react to this supply. Yeah, he reacted to this supply, and the reason he acted from this supply, say, it is very, what's it called? Relatable because just the same thing we drew out here. Market has not trade back into a discount zone that we can trust to buy, and it has formed a new high. So he wants to trade back into it very well before the trend continues. So that's simply what market is doing. It is more like a corrective movement before the impulse continues. Now that is one. The second thing is if you now mount your fib tool on this last swing structure, this low to this high, you see that this market is still in the premium zone. And this is why I usually say, even if your setup is valid and it is in the wrong zone, it will fail. So this market is still in the premium zone. Buying is not an option. Before I will buy at all, market must sweep this low before I will buy at all. It must sweep that low before me I will buy. It's as simple as that. So if you did not do that, I'm not entering. That's it. And the fact that the mitigation is coming from a zone like this supply also tells you that okay, we might be seeing a very long time sell here on this pair. that might even want to take out all this pay. But the another thing that is telling me that this sale is not a long time sale is that the market is just dropping. It is not, and this is not an efficient price action. These are what you consider to make your decision. This is not an efficient price action. So this sale is just, it is more of, it wants to clear this liquidity here now. And once it is done clearing it, it is like it is packing that money. Once it is done packing it, it is going to drop it back here. This is what it will do. It will sweep all of them. Then now go back to deliver it. Inefficient price action like this cannot just be like that. It cannot just be like that. As it is dropping, you can see it is leaving gap, lots of gaps, lots of gaps. If this market should open again and it just keeps dropping, just believe it that the buy will be very, very drastic. Except if it should open and then correct this move, then we can say, okay, this sell is for a long time. But if it keeps dropping like this, it is just coming to sweep some of this liquidity here before jumping back up. Now, take a look at something. Let me quickly share something with you. You might be thinking, okay, this demand also, you buy it there. One thing that will change that mind is it is exactly at 50%. It can work, oh, but it's not something me I will bank on. I love to see it trade below that 50% into discount zone very well before I will join the trade. So that's it. That's why I trade. You get me? That's what I do. So is there any other question? So okay, let's even now do something like an analysis here. With the way this African Queen, pay attention. You see that this candle, before it moves up, it swept this low
Yes,
first.
sir.
You can see that it swept this low. That's liquidity graph. Let me delete this one. Those are concepts you pay attention to if you want to make liquidity grab or liquidity your core strategy. It swept this one now before breaking structure. So it is more like it has peak liquidity from here and it has dropped it. So if something like this, if this market now as it is dropping now, if it should create an engineer, if it should engineer liquidity and trade very well, then this might even be the other block it to react from and we'll buy. Because this zone, they don't have another block. They don't have a liquidity I can trust. Also, you see this type of ranging market above any valid demand like this or supply, it works very well. If it is on XAU, it is on XAU that I usually see it play out. You see this strategy, though, even if you are trading XAU, write it down somewhere, black gold, XAU boy. Let me draw it out here. It works like at the cuts up. Okay, before the structure breaks or even after it breaks, then you see something like this. You're ranging close to your POI. It can be 2, it can be 3, then it will break. This structure will just sweep all these ones, tap into your zone and go. Very clean setup. Very, very clean setup. The only reason this setup will not work is if, let me give you the antidote, is if, okay, let's say the structure is like this. Then the ranging market has now traded into the demand you have here. It has mitigated the zone, especially on lower time frame. If it has mitigated there, then it might not work. Then it means that the last unmitigated zone here will now be what you will use to now continue the trade. Who understand what I'm talking about?
This is exactly what I trade, boss. Check the
Yes,
chart,
yes.
sir.
You dey pay attention. Black gold. The gold no be for vain. That's exactly. It is still loading, but I'll check it. This same. Let's go on gold. Let's not just talk about it. Let's check it out on gold. It is just that once it is Friday, I don't like trading And it was unfortunate that this gold now really, really moved that day. Take a look here now. This is even an example of the antidote that I said. The reason normally this market is supposed to what? It is supposed to sweep this low before the buys, right? That is what's supposed to happen. But the reason it did not sweep this low is because this range now, this leg has tapped into now price use FVGA. It has tapped into the FVGA to continue that bias. So it just used what? The remaining or the next unmitigated POI here to continue the trend. And because this POI did not have a liquidity close to it until this one that it's generate that it's engineer. This one that the engineer, and even before it engineer itself, it has tapped into it. That is why the price now use what? It now sweep this order block itself. If I'm supposed to enter this trade, this is where I will enter. Below this order block here. It sweeps that order block before we now see the pumps up. Now, some persons might still be saying they want to buy from here. They might still be saying they want to buy from here. They want to wait. But let's now analyze it together. Let's check it out together. We'll see if price will come there or not. Even you will tell me. Now, take a look at the price action here now. Has it been mitigated or not? Let's hear. Let me hear from you. Has it been mitigated or not? Let's check 30 minutes again. Check it out, oh. Why is my network slow like this? So check it out. You can see that there is nothing unmitigated here again. So that's the next entry I'm looking at on gold is simple. And I'm using the daily. That's why I even map out here. I want market to reverse once market open to trade back into this gap here between this line. I'll find my entry and I will join the trend. Subhana Obika. So that's another way of trading, especially on pairs like this, especially gold. And that's why most people don't understand gold because they want to see that traditional move. They want to see inducement, order block, blah blah blah. And gold sometimes we not use it. It will not use it. It will just gold moves from liquidity to liquidity. Now, as this movement as where this place that it has reached now, you cannot be waiting for it to come back here before it continues. It will just what? Reverse into this FVG here and continue the trend. This 4 hour FVG also, it aligns with the daily time frame on that I mark out. So that's what we are trading. Very simple. Is it not simple? And then you also see an order block here, a decisional order block here that's also falling into that zone. So confluence are whatever you decide to trade, it is only wrong if it is wrong. If it is not wrong, you will see the same thing everywhere, no matter what you are trading. It is the same thing you will see. But when you are wrong, that is when there will be difference, there will be a series of stuffs. That's the only thing that can confuse you. That's the only thing that can confuse you. Trust me. So, okay, I think your screenshot should have loaded already. Let's check it out. I'm waiting on if there's any question from any of us. Ooh, if I should post something like this on YouTube, there's a lot of premium info here. So I'll make another video for YouTube. I am actually happy you were able to get in on that buy because most people they were already expecting gold to be bearish, and gold is not even ready for that. USD CHF. Let's see if my time if we can still see something like that. USD CHF. Let's go there. USD CHF. All right, let's check into it. Very straightforward. That's the price action I expect. The reason I easily locate this is because I have a setup on DXY. So I expect price to tap into this supply and sell. Let me show you my DXY setup. Do you see that? So that's why I'm expecting something like that. All right, this is the other block I'm trading. And liquidity has been swept. Liquidity sweep, break of structure, inducement, find your entry, POI. So is there any question? That's very straightforward, sir. USD JPY. Same thing with this one. Same thing. Once you analyze DXY, I can even blindly trade any other pairs. Let's check. Let's check that out specifically. There might be some bots to some of them because not all these pairs use currency correlation every time. But most times than not, you will most times see the same thing on them. Take a look at this one now. You can see it is not. I've labeled a lot of stuff. You can see it is not giving us a clear POI like that one. So there can be exception in some of them. But let's check it also. Okay, I have a setup here. I think I even sent this one to the academy. I had a setup here, and it is yet to even be mitigated. All right. So with the currency correlation, this is actually the POI I have here. I think I had this set up on 1 hour. Yeah. So this is the POI I have here. Well, I'm not trading this PO, so don't just trade it blindly. But in situations like this is what we expect here, especially with how very, very interluded this daily time frame is. Everything here is a range market, and this one has swept it and broken the structure. So I'll be looking for an unmitigated zone around here at this zone specifically, this zone here. This is what I'll be looking for, an unmitigated zone to join the trade from. So more like what's this entry? QMR. Yeah, that's what I'll be interested in using here. So I might just get my entry here, and all these will be a form of liquidity. The market will sweep to tap here and sell. So I can be interested in something like this. Let's check 1 hour. In this kind of situation, Seth, I won't be going to lower time frames too much because the lesser you go, the more you are supposed to see. But it will confuse you when you see too much. To confuse you when you see too much. So the reason I am more skeptical that that thing will work is take a look at what we have here. This supply that work here now did not have inducement. Price did not engineer liquidity, a clear one. And then it still worked. So it means it is more like price is just, let me delete all these stuffs so you'll see what I'm talking about more clear. So it is more like price was just engineering liquidity all this while. All three here. All these, they've not been swept. So it can be something like that. So whereby price will now use this. This was the liquidity price came to sweep. It will now use this, tap into it very well. And then we see our shots. Let's check 30 minutes and see what we have there. You see the liquidity that was swept very well here now. African coin, that's another concept of liquidity sweep. Oh. That's what give birth to the concept of QMC, QMR. That's what gives birth to it. You mark out the liquidity that was swept, and you wait for market to trade back into it. You can see it very clear here that this market has not really trade into that liquidity that was swept. So that might be what market is gearing up to. So those of you watching this pair, those of you trading it, you can keep us posted. Now, take a look at something. Before I go down to the lower time frame, I just drew my order block where I drew it on this week alone. Because I know when I go down to the lower time frame, that will be where the body candle will be for the actual order block that was swept. So that's how to interpret higher time frame. Even without going to lower time frame, when we now go there, it will align. So I mount the week here. You might be confused. Why did I use week and not the body? Because I know that lower time in this kind of situation, our market is jam-packed like this. That's something it is using. It is gathering liquidity. Then it will now sweep all those lower time frame. The purpose of liquidity is to stop people out. Do you know? And for it to stop people out, it means it will make it look real, as if that's the actual setup. But it is just there to stop you out, to trick you, to enter early. Like this one now, to enter early. Like this one's now to enter early. So look at the way it has jam-packed a lot of stops. And then it can just go. And even this market can, this zone here, this lower here, is still a potential entry. I'm not deleting it. It's still a very good potential entry. Because the inducement also broke structure here. So it is a very good entry. And price has just been loading up, and it has not failed it. It has not failed it. So if there's no more question, then we call it a night. We've tried. This is almost 10. That's like 2 hours study. I believe we have checked in on one or two things, and we should be able to use that knowledge in the coming weeks. Just don't forget, please pay attention to stuff. Draw it around you. If you have board, draw it there. If you have paper, draw it somewhere there. Don't forget, you need that thing to keep you updated. That's why this weekly session, don't miss it. You need something like this to keep you updated so that you won't forget anything. You always remember. You always, okay, as simple as support and resistance, as simple as it can be. You might forget sometimes, and forgetting can cost you something. So that's why you don't want to forget here. Negligence of anything, wetin e go take, it too big. So let's pay attention to a lot of stuff. So help us God. So good night, everyone. God bless us.